Hello everyone, this is the pre-market report video for today 25th September 2023 in the Indian stock market in terms of Nifty and Bank Nifty. First, let's have a quick recap. On Friday, again both ICICI Bank and HDFC Bank had a bad day as both of them were the top two Nifty negative contributor. I mean, out of 68 negative points in Nifty, these alone contributed for 54 points on the negative side. Again, this is mainly due to on Thursday, Jefferies downgraded the target price and also released a huge report on Indian banks, how it's going to have a margin pressure in the next 2-3 quarters, which are all we discussed in detail in the last pre-market video. Then contrast to that, SBI was the top Nifty positive contributor and in fact public sector bank alone increased over 3.5%. Here you may ask why didn't the Jefferies told that all the banks, particularly larger banks, will have a significant margin pressure? If so, SBI has to be negative, then why it's positive? To answer that, on Friday, JP Morgan announced that they are going to add Indian rupee bond in their emerging bond index from June 2024 onwards. Here, both the parties in Indian government had been lobbying with JP Morgan for almost 10 years for the inclusion of Indian rupee bond in their index. Now, finally, they agreed to that. They said for every month from June 2024 onwards, they are going to add 1% until it reaches the total weightage of 10% in their entire emerging bond index. So basically, this way, this will bring initially approximate 20 to 30 billion US dollars of foreign fund, and this will help India in their current account deficit problem as well, which in turn will prevent the rupee slide. Anyway, that's for long run benefits, not the immediate one, but the announcement made the public sector banks very positive as they were the major beneficiaries of this rupee trading bond. Particularly Punjab National Bank GLEDS, its share price increased 20% in one single day, Friday, and it hit the upper circuit. So PSU Banks saw the strong buying following the JP Morgan's announcement of India bond inclusion, while pharma and metals were the major sectoral draggers. Here again, because of this Fed hawkish comment, all the pharma generic medicine companies who export their product majorly to US closed negative. Thus, in the end, for the fourth straight day, both Nifty and Sensex closed negative. If we see the weekly basis, our market recorded its biggest weekly loss in last 7 months. I mean, after 3 weeks of continuous increase, it snapped and closed both Sensex and Nifty down around 3% each. However, the magnitude of the drop is slowing down, or technically we can call that as softening, as the advance return ratio on Friday was around 1. So the same number of stocks were advanced and declined. But still, FIIs were the net sellers. The net sold for approximately 1,330 crore rupees, while DII net bought around 800 crore rupees. Then coming to US, there was no major macro released on Friday. However, couple of FOMC member did the interview. One thinks it will be appropriate to have one more rate hike and longer interest rate period, and another said that the additional rate hike is not off the table. Again, both the statement didn't go well with the investors, which in turn pushed the S&P 500 below the 100-day moving average. In the end, Dow Jones closed negative 0.31%, S&P 500 decreased 0.23%, while Nasdaq was down by 0.09%. In case of VIX, it's still around 17. Regarding oil, not much change. At the time of this video, WTI crude oil is trading around 91 US dollars per barrel, while Brent crude oil closed at around 92 US dollars per barrel. Then, in case of Indian areas, Infosys and HDFC Bank closed positive, and the other two closed negative in line with the Indian market. Here, regarding Infosys positivity, we'll discuss in detail in the later part of the video. Now, unlike ICICI Bank, HDFC Bank's share price change between the market in the last 1 month is still over 4%. So, the positive close of HDFC Bank in US market on Friday might be due to this difference. Moving on Saturday morning, GIFT Nifty closed at 19,642. It means as per the GIFT Nifty close value, it's kind of indicating 30 to 50 points gap down or negative opening. However, at present, US future market is trading as positive. So if it continues to trade as it is now, then that might trim some of the losses in the GIFT Nifty. So that's what happened on global market. Then regarding the weekly things to look out, there are three important. One, US final second quarter GDP numbers release on Thursday night. Then the same day, Fed chairman interview or press conference is scheduled. And finally on Friday evening, PCE inflation data is due. These were the major ones we need to keep an eye out this week. Other than that, all the minor ones we can discuss on the daily basis. Now coming to stock and sector specific. First about Infosys. They won a financial contract with one of the largest Nigerian bank. In addition, filing on SEBI reveals that various US investment firms significantly invested in Infosys ADR. Both these made the Infosys ADR to close positive. So expecting the same impact in Indian market as well. Second, Bajaj Finance planning to raise up to $1 billion across the investment firm. So those impact we can see in those stock price. Third, just for info, this week 18 IPO is going to open for the public subscription, and in that JSW Infrastructure is also one of that. Finally, as per stock open interest, Shree Cement, HDFC AMC, Polycab, Ultratech Cement and JK Cement were some of the stocks that got increase in open interest along with the price drop. Thus, it points to a short build-up. Whereas Canara Bank, Vodafone Idea, Apollo Tyres and Maruti Suzuki got an increase in open interest along with a price increase, which indicates to a long build-up. As a summary, US market closed slightly negative and GIFT Nifty is indicating a gap down opening. However, at present, US future market are trading positive and there are some stock specific positive with Infosys. Also, Reliance GDR closed flat, so we might say prices are looking to stabilize. Regarding the things to look out, it's just ECB president speech and one FOMC member speech or interview is scheduled today. Coming to technical, Nifty forms a fourth red medium candle with a long upper shadow and short lower shadow. So basically the downside momentum continued and the last two gap downs becomes more negative as the days progress, which means technically this market action indicates a sell on rise. This could mean more weakness for the markets ahead. Anyway, at present this recent correction has caused it to dip below the critical 21-day exponential moving average, and then as following the 50-day exponential moving average is around 19,550 level. Hence, that will be the crucial support. Here, I am expecting a temporary minor upside bounce back. On the higher side, 19,800 to 19,850 is the resistance zone. Again, this is in line with the weekly time frame as well as it forms the lower low and lower high formation. Then in case of Bank Nifty, more importantly, it has closed below the crucial 20 and 40-day moving averages, which is a huge sign of weakness. The daily momentum indicator has a negative crossover, which is again a sell signal. Thus, both price and momentum indicators are suggesting a further decline. On the weekly time frame, Bank Nifty fell 3.5%, the biggest weekly loss since last January, and has formed a robust bearish candlestick pattern with above average volumes. Considering that sharp fall during the week, the present immediate resistance is around 44,900 to 45,000. Then on the downside, 44,500 to 44,300 support for the short term perspective. Then on the weekly options front, the maximum call option open interest was seen at 19,800 strike, followed by 20,000, and the new maximum call writing is also at 19,800 strike. Hence, 19,800 could be a hurdle on the higher side, while the maximum put option open interest was seen at 19,000 strike, followed by 19,700 and 19,500 strike. Thus, it indicates that 19,500 is expected to be the crucial support. Similarly, in Bank Nifty, 44,500 is the support to look out for and 45,500 is the resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.